Hello, I'm Grace. On July 16, the Monetary Policy Board of the Bank of Korea, BOK, is set to decide on the base interest rate, a move that will dictate the future trajectory of the nation's economy. Financial markets are currently focused on whether the upcoming decision will serve as a significant turning point for the country's monetary policy. According to recent reports, market participants anticipate that the base rate will be raised to 2.75%, a level higher than the current rate. This decision is expected to be a watershed moment, moving beyond a simple numerical adjustment to determine whether the economy is entering a full-scale phase of monetary tightening. Experts analyze that there is a very high possibility that the trend of interest rate hikes will accelerate, using this July increase as a starting point. The scenario gaining traction is that this will not be a one-off hike, but rather the beginning of a series of additional rate increases in August or October. The market views a unanimous decision as highly likely, which would serve as an indicator of policy consistency. When comparing the magnitude and pace of the hike, the market has already accepted tightening as a given and is now focusing on gauging its intensity. If rates are raised, commercial lending rates are expected to rise in tandem, leading to an immediate increase in the interest burden on households. This deepens the central bank's dilemma as it attempts to balance two critical objectives: curbing consumption and managing household debt. More important than the rate hike itself is the signal the Bank of Korea sends to the market regarding its future policy direction. Financial market volatility could fluctuate significantly depending on how strongly the Monetary Policy Board expresses its commitment to consecutive hikes. Ultimately, this meeting is expected to function as a rudder, determining the path of future monetary policy. If the stance on rate hikes becomes firmly established, structural changes are likely to emerge in asset markets and corporate investment sentiment. In conclusion, the message from this meeting will go beyond a mere announcement of figures. It will serve as a signal that the economy's tightening cycle has officially begun. The financial markets are now prepared to react more sensitively than ever to resolve the uncertainty surrounding the future interest rate path to be presented by the Bank of Korea. I'm Grace, thanks for watching.